Good morning, everyone. Hello, my name is Dee Ryan, and on behalf of the team at Limerick Chamber, I'd like to warmly welcome you to this morning's webinar on the COVID-19 wage subsidy scheme, an update on that as it's now in its operational phase, and many queries have come up for people who have applied for it and are availing of it, and also an update on other government supports that are available. I'm delighted to introduce you this morning to Dara Kelly, Partner in Corporate Finance at Grant Thornton in Limerick, Teresa O'Gorman, Director for Tax, and Lisa Chapman, Associate Director for Tax, who are going to take us through the presentation that they've prepared for today. And I'd like to thank them for the work that they've put into this information session for you. Before I hand over to Dara, I believe is who I'm handing over to. Before I hand over to the presentation, I'd just like to update you. I'm sure the team will be taking you through this, but the government restart fund, the restart grant, which is a grant available to you, proportionate to linked to your rates that you paid to the local authority in 2019. That is due to open for applications this Friday. I'm in communication with the Limerick City and County Council to confirm where people go to make that application. My understanding from a discussion had yesterday afternoon is that it will be a very straightforward one-page application form, and they're just awaiting sign-off on a frequently asked questions document coming down from Dublin that they can upload with the form to make it available. My understanding is that the application will be made actually through the local enterprise office rather than through the council directly themselves, but I'm getting confirmation of all that, due to get confirmation of all that this morning, and we'll be putting it on an e-newsletter that will be going out to the membership today. So without further ado, I'm going to hand you over to Dara, and thank you.
Thanks very much, Steve. Good morning to everybody. Thanks very much for having us on the webinar this morning. So I think the opening session is going to be very topical, and we put it up front because I think it's the most relevant considering the level of businesses that are availing of the wage subsidy scheme. So I will ask my colleagues Teresa and Lisa to run through the update on the wage subsidy, and then I will take a session on the funding landscape and the various COVID-19 supports available. So over to Teresa.
Thanks, Dara. As Dee said, this is what we're mainly going to cover this morning is the operational phase, which is effective for all payments made after the 4th of May. We will refer back maybe to the original scheme because some of the rules obviously still apply. And I suppose the historic part of this is that, the subsidy came in on the 25th of May. We're now on version 12 of the revenues update, which is a lot of updates in a short space of time. And it was certainly a work in progress as far as they were concerned. But this is the operational phase as it stands now, and it looks as if this will remain in place until the subsidy ends. And on that note, the subsidy was originally earmarked to end in June, but that has been extended probably for at least another 8 weeks beyond that. So if we look at the operational phase, this is where Revenue had spoken from the outset that they were going to tier this up for employees based on their average weekly net. Now, the average weekly net, as from the outset, was calculated on the basis of your average weekly net pay that you received in the periods January and February. So in calculating that average weekly net, they took your gross pay and any deemed pay, which is your benefit in kind, and from that they only deducted tax, PRSI and USC. No deductions were made for any pension, any savings, any medical insurance. So it would be different in some cases to what is on your payslip. That's the average weekly net that we are basing this on. So based on that then, initially the individuals who had an average weekly net of greater than 960 per week were excluded from the subsidy, and that they've been brought in now in the operational phase, and we will look at the effect, but they have to take a substantial pay cut in order to qualify for the subsidy. The changes from the original one was individuals who had average weekly net pay up to 412. That subsidy has increased from 75% to 85%. And for those with an average weekly net of between 412 and 500, the subsidy is a flat rate of 350. Again, this was percentaged. The other rates then are based on a tapering rate. And talking about that tapering rate, Revenue, I've always said from the outset that they would produce a ready reckoner or a table where that would enable employers to determine what net pay they could pay and the subsidy attaching to it. And they have produced that. So all employers can now download from the Revenue website a CSV file, and Lisa will cover that as to how you can download that. And she'll give you a sample of how it works. And it cuts out all of the administration and all of the calculations and all of the doubts that was previously on all payments up to now, up to when that CSV file issued. I suppose just as an update, and I don't know that this is out on the market yet, but initially anybody that applied for a subsidy, irrespective of the level, be it the percentage or be it the flat rate of 350, on all subsidies prior to the 4th of May, Revenue as a blanket repaid €410 per qualifying employee on the proviso that they would claw it back. And the clawback has started now. Now, they haven't said how they're going to claw it back. What they've done is they've started to issue notifications to employers to say, this is the amount that we have repaid to you on an Excel spreadsheet. This is the amount that we've repaid to you for naming out the individual employees, and this is the amount that you have claimed. So they're actually showing you the amount that has been overpaid to you. They haven't specified how they're going to claw that back as yet, but I would imagine that that will come fairly soon in the next coming days. So what is the wage subsidy? Initially, all of the Revenue wording was around, it was a subsidy to assist employers to keep individuals on their payroll, so that they would maintain a business and have a business when the COVID-19 stopped, and when we could go back to work, that people were still in business. Their emphasis has kind of changed over the evolution of the 12 versions, and it's now a mixture of between employee-based benefits or employer benefits. But essentially, it's managed by the employer, but for the benefit of the employee. So, just to recap on what an eligible employer is, it's effectively an employer that must self-declare to Revenue and demonstrate to Revenue that they have suffered a minimum of 25% decline in their turnover or their customers' orders. They also have to have the inability to pay normal wages and other outgoings as they arise. And when we look at the reduction for the 25%, we have to look at it globally. And Revenue have given guidelines initially as to what that will be. You know, will you compare quarter one with quarter two? If your doors were closed and your businesses were shut up or closed up, obviously you had no turnover. So that will demonstrate a decline of at least 25% in turnover. But businesses, I suppose, are starting back up, and they're getting a surge in those initial days when they do start up. And businesses are concerned that because I'm back up maybe to 90% of what my turnover was, will that take me out of the subsidy? And I would say you have to look at it, as the bigger picture. You might have a surge, like I'm sure all the hardware shops and the DIY shops and the garden centres all have big surges this week and probably next week, but what will happen for the remainder of the quarter? So you have to look at it on a global sense. And Revenue have taken a very pragmatic and practical view of it, and they're saying, be practical about it. Look at the overall picture and see, do you come in within the 25% in a quarter or other comparable period to last year. So just because you have a spike doesn't necessarily mean that you're no longer eligible. You have to look at the overall effect of that spike and how continuous it is. And some of the slides are just going back on the basic, as in how do I apply for the scheme. The scheme initially is a self-declaration through Ross My Inquiries with Revenue, and the slides will give you a step-by-step detail as to how to do that. How the scheme is operated. Essentially, you must pay your employee a subsidy. They must be kept on your payroll. If, as an employer, you do not have the ability to top up or increase their wages to what they were, or to even subsidize it somewhat, you must record at least 1 cent on your payroll in order for it to qualify, in order for Revenue to recognize it on their system as qualifying for the wage subsidy. You will also need to change their PRSI class to J, because any payment that you do make is not really PRSIable. The subsidy itself is not taxable at this point in time, nor is it subject to USC or PRSI. It will be taxable in the future. Revenue haven't decided as to how they will manage that or collect that from the employee, because now that's an employee liability, it's not an employer liability. And some suggestions would say that currently for employees, and that's what we're talking about when we're talking about these underpayments of tax, for employees, it's an unwritten rule in Revenue that if you have an underpayment of €400 or less, Revenue will not collect it by reducing your tax credits. Normally they would. If you had a large underpayment, they would reduce your tax credits maybe over 1 or 2 years. But if the underpayment is less than €400, they tend not to collect that underpayment. However, any future overpayments that you might have due to medical expenses or other claims, they will not repay them while that debt is outstanding. So what's new for higher earners? So as I said, initially any higher earners that earned in excess of €960 net per week did not qualify under the original scheme. In the operational phase, Revenue have expanded this to include those individuals, but you have to take a substantial pay cut, and you have to take a substantial pay cut from your net pay. So if the minimum pay cut that you have to take is 20%, and as I said, that is 20% from your net pay, and that is to achieve a subsidy of €205. Now, if you take a 20% pay cut from net pay, that's the equivalent of nearly 40% pay cut from your gross. So it's a really substantial pay cut. However, if the business, is somewhat operational and cash flow is difficult, it just might be a consideration that you have to take on board. The subsidy will increase to 350, and I'm talking about weekly. This is per week, 350 subsidy per week if the net pay reduction was 40% or more, and that again is the equivalent of an 80% on the gross. So in calculating that, your revised pay cut salary is now your new gross, and tax and PRSI, tax and USC is payable on that. PRSI isn't, because it's a top up, and class J9 will apply to it. So I'm gonna hand over to Lisa for the practical steps and how the subsidy now works.
Thanks, Teresa. So I'm just going to run through some of the calculations from how they're due to work from the 4th of May. So the it's broken into two bands. So the first band is for employees with net pay of less than €586 per week. So it's broken into tiers. So where the previous average net pay for an employee was less than €412 per week, the weekly subsidy is now 85% of the average net weekly wage. This used to be 70%, but now it's gone up to 85%. The next tier then is for employees whose average net was between 410 and 500 per week. So this is now up to 85%, but capped at €350. The third tier then of this band is for employees whose average net weekly pay is between 500 and 586 per week. So this remains the same at 70% of the average net weekly pay, up to a max of 410. The next band then is it's slightly different from how it was before. So it is tiered again, but this now depends on what top up that the employer pays. So where the average net is greater than 586, and if an employer makes a top up of up to 60% of the average net weekly wage, the subsidy available is up to €350. Where the top up is between 60 and 80% of the average net weekly pay, the subsidy is up to €205. So there is a bit of a difference there. And then there's no subsidy at all available if an employer tops up by more than 80%, or if the employee is paid more than gross pay of more than €960. So we've just prepared a couple of examples, which I'll just run through quickly just to give you a sense of how it is working. So this example here is just for an average weekly net pay of less than 500. So the first step here is to process 85% of the average net weekly wage up to a max of €350. Then you process the top-up payment to bring the total pay to no more than the average revenue net weekly wage. So if we put it into context, if we have an average net weekly pay of €400, the subsidy available is 85% of that, which equates to €340. Then the maximum top-up available for that employee is €60. So again, the top up and the subsidy can't exceed the average net weekly wage. So it's just to bear that in mind. The next example then is just for employees in tier 3 of that first band. So it's for average weekly net pay of between 500 and up to 586. So here you process 70% of the average net weekly pay up to a max of 410. And again, you process the top up then to bring it up to the maximum of the average net weekly wage. So again, if we have an example of an average net weekly pay of €550, the subsidy available for that employee is 70%. Up to a max of 410, which in this example is €385. So the maximum top up that employee can get is €165. So again, you can't pay more than the average net weekly wage. If we go on then to Band 2. So Band 2 then is for employees whose average net weekly is over 586. So here it comes into what top up basically that the employee or that the employer, excuse me, is going to pay. So if we have an employer who's going to make a top up of up to 60% of the average net weekly wage, you can process a subsidy of $350, again as a non-taxable payment. So if we put it just into context, so if we've an average net weekly pay of $850 and the employer is going to make a top up of up to 60%, they're entitled to a subsidy of $350. And then the maximum top up is €500. So the €500 and the $350 give you your average net weekly. Again, you can't pay more than that, but where you do, and if you pay more than 60%, you're into the subsidy of 205. So in this case, 60% of 850 is 510. So if an employer makes a top up of more than 510 to an employee, that subsidy goes from 350 to 205. So it's very important to bear in mind the top ups and not going above the average net. The next one then just shows the difference between topping up by under 60% or between 60 and 80. So if it's between 60 and 80, you're in a subsidy category of 205. So in this example, if we have a net pay of €900, subsidy of 205, the maximum top up to bring the gross pay up to the average net pay is 695. Whereas again, if you top up by more than 80% of that €900, which in this case is 720, the employer will get no subsidy for that employee at all. So again, it's very important to bear in mind that. And just on that as well, I should have said those top ups are gross pay. So tax has to be withheld on them as well. So tax and USC. So that again might bring the average net wage that that employee is getting, that net wage for that week, down slightly. So just to bear that in mind again. This final example that we have done is just for employees who were who their average net was greater than €960, but with pay cuts, their new gross now is below 960. So if we just take an example here that their average net was €1,200, the employer is going to make a contribution of €800. So that top up is between 60 and 80%. So the subsidy they're entitled to is €205. However, 205, you can pay more than a gross pay of 960 in order to get the subsidy. So obviously 800 and 205 is just over €1,000. So the extra €45 needs to come off the subsidy amount of the 205. So that gives you the revised subsidy of the 160. So then the 160 and your €800 are the gross pay for that employer. Again, that €800 is subject to tax. So the net pay for that employee will likely be below the 960 as well. So again, just to bear that in mind. Teresa had mentioned that Revenue have prepared CSV files for all employers, which will give the vast majority of this information for the payroll. So on the slides, I have just we've just detailed how to download it on ROS. So it is very straightforward, just under the request RPNs on the My Services tab. Then you just down at the very bottom there, you request a temporary wage subsidy calculation. You'll be asked then just to hit request calculation and put in your password, and then you'll just download the file and save it somewhere to your system for uploading into the payroll packages. Now we've noticed that some of the payroll packages are just a bit different, so just obviously follow those rules in just downloading it. I've just done a sample CSV file here to show people. I know it's probably a bit small and it might make a bit more sense when you get the slides after it, but on the left hand side of the file, it just gives like employee details, names, PPS numbers, just the normal information. And then as you go over along, particularly the columns that are really going to be important are kind of L onwards. So L gives you the average net weekly that the employees would have been due, or that they're based on the calculation of their wages in January and February. And then as you go along, it's tells you what their subsidy available is and what the maximum top up is. Now, I'm not sure if you'll be able to see it just on this, but if we just take, I just picked a couple of examples like line 14 there, for instance, it just shows that this employee's average net weekly wage is €470. So they're in the wage subsidy of €350, and then they're entitled to a top up of 120. If you look then from columns P to T, you can just see that it gives you tiers 2 and tiers 3. So that is particularly it's only for employees whose average net was over 586, and so it'll tell you what subsidy that employee is entitled to if you top up by whichever amount. And then finally, just before I hand you over to Dara, we have just put in just a summary there of the various tiers, just so just as a quick reference guide, just so you know as well. With that, I'll hand you over to Dara.
Thanks very much. Thanks, Teresa. Thanks, Lisa. Good morning, everybody. My name's Dara Kelly. I work in the advisory team in Grand Thornton in Limerick, and today I'm just going to run through a recap of the various funding supports that have come out over the last couple of weeks / over a month now, to deal with COVID-19 and the funding requirements that have landed on the balance sheets of businesses. Definitely not planning for anything like this to happen. So, it's essentially a bit of crisis funding. So there's a lot of options now, and we've listed them out on this slide, and we will circulate the slides after this presentation. There's quite a lot of detail in each of them. So I think each business needs to look at themselves, look at what requirement they need, and then assess which is the most suitable. But they can break down, you can break them down into local enterprise office, then we can break it into Enterprise Ireland, and then we've got SBCI, which is really through the banks, and then most recently is ISIF, which is for larger businesses. The first thing I'd say is really need to be engaging with your bank. So make sure the lines of communication are open, number one, regardless of which scheme that you take advantage of, because a lot of businesses are going to need to look for new money on top of old money. And I think that's really where putting your best foot forward at initial engagement is really important, because the banks are going to be overrun with applicants. So really need to make sure that when you're engaging with them, you're giving them good, clear information and allowing them make decisions quickly. Because I think we all learned from 10 years ago that we need to make decisions quickly in a crisis. And I'd like to think that the banks have that, that experience from 10 years ago, that they'll react quickly and support businesses coming out of the rest of 2020 and into 2021. So I'll start with the local enterprise office. There's basically there's three supports here just to touch on. Now you can get other supports from your local enterprise office, which are on the right of the slide, but I'll talk about three very quickly. So if we can go to the next slide. The first is the business continuity voucher. Now this has expired, but it's been replaced, and Dee touched on it at the top of the presentation around the Restart grant. Now we understand that's going live on the 22nd of May. It'll be an online application. It is a grant, right? So that's obviously doesn't need to be repaid, and you can get up to €10,000. They're going to use as a pro rata how much to advance will be based on what rates you paid last year, and it's quite broad, so it's open to any business under 50 employees and 5 million turnover. So you just need to show that you're impacted or closed. So I think this is the restart grant is an obvious one that everyone should be looking at. And as I said, it's an online application through the local authorities. So I think everybody should be looking at that and seeing if they fall into that um, criteria, and definitely take advantage of that. So the next one, if we go on to the next slide, is the online one back. The so I think it's the online trading voucher first. So this is to allow businesses which have very limited or no website to make an investment and get an online presence. Obviously, C19 is pushing a lot of trading activity online and out of in-store physical presence stores. So this is a voucher to allow businesses either improve their existing online presence or to build out on a website. So again, it's for smaller businesses, 10 employees or less, or turnover less than 2 million. Now, there is a lot of reference to employee numbers. We are seeing that there's a little bit of flexibility around the employee number. It's not going to be totally hard and fast. It's how you engage with your local enterprise office rep or your Enterprise Ireland rep. So there just is a little bit of flexibility on that. That's what we're seeing in practically over the last couple of weeks. So just don't get too caught up if you're on the line of the number of employees. But again, this is to establish an online platform for future trading. The next is access to loans from via Microfinance Ireland. Now the loans are from 5 to 50,000, 3-year terms, and you can get a no payment position for the first 6 months. The interest rates, we're just telling all our clients to go through their local enterprise office and you get a slightly better interest rate. But again, it's for businesses that are at the smaller side on an employee base and also on a turnover base. And have tried, there is a common theme now as we go forward, and that's why I said to engage with your banks up front. For some of these supports, you do need to show that you have tried to raise finance from your bank and that hasn't been available, or that for whatever reason, from an underwriting perspective, the bank has not been able to support you. So do start with your banks, open the line of communication. And as we get further into the presentation, the SBCI supports, they're actually through your bank, so you would engage with whoever your contact is in Bank of Ireland, Ulster Bank, AIB, and that's how you process that application. So again, this is very, very good for businesses at the smaller scale on turnover, and it's an online application, so limited documents required. So it's a limited business plan, cash flow required, but limited enough information to get the application in. So the next, so that's your local enterprise office supports, right? So now we're moving up a little bit on scale of business into Enterprise Ireland supports. So there's a number of supports here listed on the screen. I will run through each one of them. Again, it's around assessing your own business requirements and what sector you fall into. So what Enterprise Ireland have realized is they're going to need to be able to process a lot of applications, and businesses also need to really do an internal review of where they're at. Cash flow projections are absolutely critical here, and a projected cash flow is done with a set of projections around P&L and balance sheet. So that is what every business should be doing. Now, in order to help the burden on businesses prepare strong business plans and cash flows, Enterprise Ireland have put in place a financial planning grant of so if we move to the next slide, of €5,000. So this is a grant that any Enterprise Ireland or IDA client or a business that's operating in manufacturing or internationally traded services that employ 10 employees can avail of. And it's there's a list of accountants / consultants on a panel with Enterprise Ireland. So businesses make an application to access the grant, and then can use that grant to pay for the fees payable to an accountant to help them prepare a business plan and financial projections for the next 3 years. So they're essentially providing the funding for the support that a business can prepare itself to, number one, assess what are its own challenges and what are its own financial projections looking like for the next 3 years, so they can plan accordingly. But then to roll that on, then should you contact your bank, you've got a business plan, you've got a set of projections. Should you access one of the Enterprise Ireland funding supports, you're prepared. And as we get to the next stage, the SBCI for the larger funding supports, again, you're prepared. So we're doing about 25 plus of these at the moment. I really would, considering it's not costing the business anything, I would really recommend that everyone should look at this if they're eligible for it. Again, the employee number, we're seeing the rep in Enterprise Ireland supporting businesses that have below 10 employees. So don't let that put you off. But again, you need the support of your designated rep within Enterprise Ireland, or else if you're in manufacturing and not an EI client, again, I would highly recommend making contact now and setting up that relationship. So next slide is what the output of that you would expect from the accountant that provides support that is on the panel for Enterprise Ireland. We've set this out in the minimum requirements that are needed to access Enterprise Ireland Sustaining Ireland Fund. Okay, so the criteria we've set out here, you might ask your accountant to do different work for you if you don't intend on accessing the Enterprise Ireland funding support. But if you do, this is the way that the output needs to look, because this is the requirement for submitting for a funding application as I get to the next slide. So I won't go through the detail there, but it's as you'd expect. Now there is some other grants that you could get in parallel with the financial planning grant. This we thought to include the business continuity voucher, which is a grant of up to an additional €2,500 for professional fees. This is really focused around operational. So again, probably not for accountants, but if you had some operational experts or operating consultants, management consultants, this is another opportunity for you to get access to their support, and the professional fees are covered up to the €2,500. So again, what we're seeing, especially in manufacturing, is clients availing of both, because they get themselves set from a financial perspective and then also get some support from an operational perspective. So the next slide on is for specifically around retail, and this is a grant, and we're going to have to tackle each of the sectors specifically. So this is looking at retail. We are expecting something to come out in hospitality as a sector from the government, but again, that'll be separate, and we'll do something on that when it does come out. The details do come out, but this is specifically around retail. So this is a grant of up to 80% of a maximum spend of 50,000. So it's a 40K grant max on 50,000 spend, and it is to provide support for retail businesses to reshape themselves to come back out of their shutdown. So again, there's no reason that you can't take advantage of this and Restart grant. But again, you will have to prepare a plan. You have to have an existing physical and online presence, so just to bear that in mind. But again, you put together your plan and you're saying, well, here's the funding we're going to have to put in place, the investment we're going to have to put in place to reopen, and we want a grant supporting up to 80% of that funding. So again, something everyone in retail should be looking at this as a support. Next one again, there's just some of the details on the just one slide back, just goes through some of the details on this retail scheme. The deadline for submission was the 20th, but we understand it's been extended, although it's not up on the website yet. So you just need to do your business plan, do your projections, and then show how true. It might take more than 12 months projections, but show how you will get back on the front foot and put the investment required. So that's where you get the support. The next slide on. This is where we're seeing the most of our activity, which is the Enterprise Ireland Sustaining Enterprise Fund. So it's a fund set up which you can access up to 800,000 euros. It is the application for this is essentially the output of the 5,000 financial grant. So on a couple of slides back, there was an output, a list of information you need to pull together. And that is the minimum criteria you need to pull together to submit an application for funding to this. Now, we have built a model, financial model, which links into the output page required by Enterprise Ireland. So we've done quite a bit of work behind the scenes to make sure that we can do this nice and quickly for clients. So really this is for businesses that have been affected by 15% or greater. And there's multiple ways of measuring that. Again, it's for the SME size, so it's less than 500 employees. And it's a fund which you can draw down up to the 800,000, but you don't have to repay for the first 3 years. So we see this as really, really powerful from a cash flow perspective, because it means a business can get cash into the business now, will not be under pressure to make a repayment through the rest of the year or 2021. And from all the supports that are out there, this from a really cash flow perspective, we see as the most powerful from the way it's set up. So there is an administration fee of 4%, and the entire advance is the term they use, but just think of it as a loan, needs to be repaid within 5 years. So it really gives a lot of headroom to businesses now when they need it, and then gives sufficient time for it to be repaid. So next slide on. If we can just roll to the next. Okay, so this particular scheme is Enterprise Ireland Rescue and Restructuring Scheme. It's not spoken about much, and I don't particularly want to go into too much detail. It's very bespoke. It's on a case-by-case basis, and you essentially need to prepare a restructuring plan that Enterprise Ireland will co-fund. They won't fund all of it, but they'll co-fund. We just go to the next slide. It's not spoken. Yeah, okay. It's not spoken about much, but it is. It's something you have to get into a lot of detail with your advisors on, and there needs to be, a common theme of mutual benefit is the phrase they're using. So it's very bespoke, and it needs but it could be powerful. We haven't seen it being used much at the moment, but it's there and it's an aid, but it's for businesses that are in complete financial difficulty and distress, and it's on a case-by-case basis. So the next grouping of support is the SBCI. So there is mainly 3 on this. Now, this scheme is run through your banks. So you would liaise. You first of all look for an eligibility code, which is an online application. very straightforward, 2 pages. Now, once you have that eligibility code, that doesn't guarantee any funding support at all. It just means that you're within the profile that can be considered. You then contact your main lenders. So there is some alternative lender as part of this, but the majority of clients will be, dealing with either Bank of Ireland, AIB, Ulster Bank, and you contact your relationship manager there and you talk about these, or you make a submission to be considered on one of these 3 schemes. So the first scheme, they're all have a very different teams. So the first scheme is the working capital loan. So again, this is for business that have been, impacted by COVID-19 and can show that, revenue's down, profitability down, future orders are down. There's a couple of ways to prove that you've been negatively impacted. I don't think anyone's having any problems proving that. It's for and less than turnover of 50 million. So it'll capture a massive population of businesses in Ireland. Now, the funding available is up to 1.5 million, but it is over 3 years. So it is a short-term solution. It's a short-term working capital solution. So you max interest rate of 4%, which is good. There is options of short interest-only payments at the start of the loan, but it is a 3-year loan. So if you think back to the Enterprise Ireland Sustaining Ireland Fund, that was a 5-year loan, let's call it, with no repayments for the first 3. So that's very different type of structure. This is a 3-year loan. Essentially, you need to start paying it back pretty much immediately. There will be some maybe 6 months of interest only. So it is for businesses that can see really pressure on their working capital, funding of the working capital this year as they open up and into the start next year, but then see themselves coming out of it and will have the ability to repay. But very functional, and we're seeing a lot of applications on this particular type of loan. So the next loan is more long-term and more focused around capital expenditure, right? So investment in plant and equipment, business expansion. Maybe you need to, a process improvement, switching the layout of your manufacturing facilities, something like that. More of a longer term investment. And therefore the loans are up to 3 million, but duration out, between 8 and 10 years. So again, this is for the longer, this is for the fixed assets investment, or something fundamental change in the way your business operates that needs time to repay itself, not short-term working capital. Interest rates, are on the larger loans at 3.5%, which is good. And again, who qualifies? It's less than 500 employees, less than 50 million turnover. So huge volume of Irish businesses fall into this. So so this is for the long-term investment. The one before is for the short-term investment. The third option, which is the credit guarantee scheme, is for businesses that don't really qualify for either of the first two. They may, have they might be difficult to get through the underwriting criteria of a bank for whatever reason. They might have insufficient collateral, as in that they can't really. There's not much security for a lender, or it might be a novel business market, not a mainstream business market. So this is the kind of third catch solution, which is basically a guarantee of the loan. So the same bank would consider the loan application. They'd go about their underwriting criteria, but they'd have the comfort that 80% of the loan is guaranteed. So that reduces their exposure. The term of these, the facilities available is up to 1 million, and the terms up to 7 years. So, there is interest interest-only options as well. But in reality, we're not seeing this. We're seeing the first two. We're seeing it's either a working capital requirement that you need support on, or you need to do some major switch around in fixed assets to get yourself re-geared for getting back into post COVID-19 business. So like some of our clients are ramping up on their manufacturing facilities, which again is a fixed asset requirement. So they're two very clear requirements, either working capital or fixed assets. So then the last, if we just scroll on, we've got the last and the most recent, if we just keep going, the most recent announcement is the ISIF Pandemic Stabilization and Recovery Fund. So this is aimed at large businesses. If you guys go to the next tab, they're targeting businesses with over 250 employees and over 50 million of turnover. And again, they're flexible enough on how this investment goes in to the business, and it's long-term. It's a long-term solution for larger Irish businesses that have been negatively impacted. So again, this is above the turnover and the employee number for the majority, for a big population of Irish businesses. So again, it is there if you fall into that cohort. So that brings us then. That's really the that is the the three different buckets you have there, and then ISIF. So bucket one is your local enterprise office. Number two is Enterprise Ireland, and number three is the SBCI, which you do through your bank. But again, for all of these, you're going to have to look at what your own business needs, and a clear recommendation is they're all having a lot of applicants. Everyone is looking for support, so they will be able to process applicants that are nice and clear with their information and have thought it through. So now the speed is the essence at the moment, so it's probably not the time to be learning on the job, but just be really mindful that applicants need to be submitting something that's nice and clear. If not, you're going to get bogged down a little bit getting through the process, and that will obviously just add time, which adds stress to the to the business and to the people trying to run the businesses. I don't predict to go, or sorry, I don't really see. I won't go through the cash flow forecasting on this because there's a lot of detail in it, and I'm just conscious of time. However, there's some good slides there, and the key message on the cash flow is to get into the detail. If we stop on this slide, it's actually quite good. It's get into the detail of your own working capital and cash flow. So get into the detail on your debtors. How long are people taking to pay you? Do you think that's going to continue post-COVID? Is there any way of speeding up your suppliers paying you? On your stock and inventory, it's about keeping that as low as possible, and consider offloading or returning stock that you can't sell in the short term, because that again is it's tying up cash in you paying for that stock. And then on the creditor side, I think it's all about communication. It's about explaining where you are, where your business is at. Maybe you need to request extension on credit terms. Look at the detail. Obviously, potentially there could be early payment discounts available to you, so you have to consider whether that's a smart move for you in your own cash flow. And then ultimately, and just the overarching point on this, is to prepare your forward-looking cash flows, integrated P&L, balance sheet, cash flow. Don't just prepare a cash flow, because if you prepare cash flow in isolation, you don't know where you are on profitability or on where you are on your balance sheet with your suppliers. So there is some more detail in the slides which we will be sending around, but that's a whistle top on the funding landscape available there, and ultimately to access any of the significant funding or material funding, you need to make sure that you have your numbers done, have your projected cash flow, balance sheet, P&L done, so that you can provide them to whatever party you're engaging with, so that they can make a quick assessment and get the funding support to you as quick as possible. So happy to take any questions, or I can follow up with anyone directly offline, whatever is best. Okay. All right. Well, thank you everybody, and have a good day.